Hello there again. Hello there again. Today's Monday, and if I'm correct, today is the 22nd of December. It's a couple days away to Christmas. Well, here we are again, David Etienne, your CPA, and we're continuing with our series. Okay, so I guess by now you guys are aware that we're going through 10 10 key components of what we hope each business person will want to think about as you go into 2026 and getting ready to have your business taxes done. So just bringing these to your attention. They are really quick pointers, what I call nuggets. And of course, if it's something or if any other topics happen to be relevant to what you do and to your circumstances, then by all indication, you are advised to go and get more information, more details on it through your providers, your accountant, your CPA, your tax preparer, etc., etc. Now, also, I must point out that although you're able to view this on the different streaming platforms, the recording will also be on my YouTube channel, which is Etienne's Place. Etienne's Place is our YouTube channel, and so all these recordings, all these little episodes, will be posted there, and you will also find a number of other videos that I think you will find to be pretty useful. So without further ado, let's jump on to number 2 of 10, huh? Because we did number 1 last time, which was, I think, yeah, we looked at the 100% bonus depreciation. Today we're moving right into this section 179, expensing. And a quick recap. Remember now that section 179, expensing, refers to that part of the IRS tax code. It's really section 179. Okay, and the provision is that whenever you put into your business any capital asset, whether it be equipment, machinery, motor vehicle, etc., then yes, the normal way of doing things is that you would depreciate these at the cost of these items over a number of years. So each year you get a write-off, a depreciation write-off, and it is always available to you. But there's a provision, which is this section 179 provision, expensing, where in that first year, note, in the first year that you put, that equipment, that asset into operation, then you can opt to have what we call a section 179 expensing, meaning you are allowed to take a portion of this capital expenditure and write it off in the first year that you put this item into operation. So let's say, for example, you bought something for 10,000. You may choose to say, okay, I'm going to write off 3,000 in the first year that I put this equipment into operation. And then the other 7,000 you will depreciate over the rest of the tax life of the equipment. Okay, so that's a provision. Now, as usual, a lot of these provisions are there for you to use if you think they are beneficial, because for whatever reason, you may consider that, I think it's better for me to just go my normal depreciation, to spread this 10,000 over the life of the asset, the tax life, and take my normal depreciation deduction. However, if you find that, in that first year, you're going to have a lot of taxable income and you want to really reduce that tax hit, that tax burden, then this section 179 option is there available for you. Very important to note that section 179 deductions can be applied against any taxable profit that you would have, and it can be applied up to the point where your taxable income or your taxable profit equals to 0. So you can have enough section 179 expensing that can reduce your taxable income from whatever it is down to 0 without limitation. However, you cannot go in the negative, meaning that if you have you cannot use that amount. You will not be allowed to expense that amount of the equipment cost that will convert what would normally be a taxable profit for tax of course for tax purposes into a negative, into a loss. Okay, so you can only, so the quick example, if without expensing you would have had a taxable income of 40,000, then you'd only be allowed to do a section 179 expensing up to 40,000 to cause you to end up with zero taxable income. You could not do a 45,000 deduction because that would then cause you to, or try to push you into a negative 5,000. That is not allowed for section 179 expensing, right? So that's basically the key components of that. So that's about it, at the surface level. If this is something that you are contemplating, for example, you may have bought some stuff in 2025, just put them into operation, some equipment, machinery, trucks, etc., and you're thinking, okay, maybe I want to consider this, then by all indication, go for it. I usually advise, if you're comfortable doing it yourself and you understand the rules of the game, go for it. If you're in doubt, always consult with your tax professional, your CPA, your tax person, whatever, whoever it is that works with you. All right. So that's about it for section 179 today on this Monday. So we looked at 100% bonus depreciation the last time. Now we're looking at section 179 expense. And the last thing I'll say about it, which I mentioned when I was talking about the 100% bonus depreciation, is that it's not a question of, do I use the 100% bonus depreciation or section 179 expensing? No, you can use them both. Meaning, you can decide, okay, for X equipment that I put into operation, I'm going to write off a portion of those items on a section 179 provision. But for other equipment, other machinery, I may decide I'm going to go for the 100% bonus depreciation. You see, so you have a two-tier benefit going on. So it's not this or that. You can really benefit from the both, if that is what works for you. Right. So that's my bit today for section 179 expensing, and so the journey continues, and we'll be, of course, going through the other days with additional stuff to come, additional stuff to expose you to see if there are things that apply to you and from which you can benefit. That's my bit for now, and so I catch you down the road, so to speak.